Hello and welcome to Connect, the weekly podcast of the California MBA featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and I'm very happy that you could join us today. Before I welcome today's guest, I'd like to thank our 2024 President's Council sponsors. And these companies provide a tremendous amount of financial support to the California MBA, in large part so that we can continue to be that strong voice for the real estate finance industry before the California State Legislature and our regulators. So please join me in thanking this year's President's Council sponsors. And those companies are AmeriHome, Arch MI, CMG Financial, Consolidated Analytics, FundingShield, Guild Mortgage, and Western Alliance Bank. Thank you all so much for your support this year. And speaking of President's Council sponsors, I'm very happy to be welcoming my friend Adam Chaudhary, who is president of FundingShield, on today's episode. Adam, welcome.
Thank you for having me.
I can't believe I've known you all these years, and we have not done this yet. That's a mistake on my part, but I'm happy that we're doing it today. I always like to kind of get started to find out how people got into the mortgage industry. So why don't you tell us how you came into this crazy business?
Well, it was a little bit of a U-turn. One of my first jobs when I was in college, I was definitely a finance geek. I started working at a mortgage servicer during college. A family member was one of the owners of the company, and they were looking for someone to come in and really figure out where the costs were misaligned. And I literally worked through claims, through the accounting department, to law SMIT, to the insurance groups. I really learned it from the ground up, and that led to an opportunity in Wall Street where I worked at Goldman. And then after that, Greenwich Capital in the structured finance world, in the structured funding world. So always kind of around mortgages, but in that capacity, more of an investment banker and trader. So never really originating mortgage. You have to fast forward to a very fortuitous moment in my life. And I always say all good things come through Ike Suri. So Ike Suri, our president and CEO, was at the time owned a firm in the human capital space on Wall Street called Options Group. And I'd known of him, but didn't know him personally. And one of my former colleagues had joined his family office about 11 years ago, actually almost on the dot today. And around the same time, I was visiting California at PIMCO and some other area, shops in the area, kind of figuring out next steps, going from sell side banking to buy side or investment management. And Ike, as I'm sure you all know if you've met him, has a great background being an owner operator, and I had a strong desire to do that and jump into that world of something more entrepreneurial. And he gave me a chance, which I'll forever be very fortunate and thankful. So we've been together for 11 years, and as part of that journey, Ike had invested in a tech-enabled services firm called FundingShield that existed pre-crisis, and was looking to kind of revamp, needed an injection of liquidity and capital that Ike brought to the table, and also needed some folks to kind of focus on it. And so I raised my hand, having some background in mortgage, as well as financing mortgage shops in the past and portfolios. And we've been at it since 2014, and in 2018, launched the products. He bought out all the partners in 16 and then launched the products in 18. And we just passed about 3.4 trillion through the systems that's been verified for clients across the mortgage ecosystem.
That's incredible. I've known you guys for a long time, and it's been such a pleasure to watch the growth of FundingShield. You guys have just you've done an amazing job.
Thank you.
I feel like it seems like the more we do to protect ourselves from companies from fraud, it seems like there's always new schemes that are coming up. I hear this from our lender members, and even on our mortgage quality and compliance committee calls. What does FundingShield do to protect lenders?
Yeah, absolutely. So lenders have very critical interactions with third parties, and probably the most critical two interactions they have is one with the borrower, right, in terms of how they engage the person that's driving the transaction, and then two, how they're closing that transaction. And there's a multitude of parties involved in that closing of the transaction that are outside the realm of the financial institution. And so because those parties are outside the financial institution, those tend to also be the weak points in terms of where the exchange of data, communication, monies tend to lead to higher levels of risk. So you can have a firm like Bank of America or the largest lenders that are even part of our President's Council have great firewalls. But now because they're interfacing with a settlement company or escrow company or title company, that may not have the best controls or has great controls, but they're penetrated or the communication is altered as it pertains to wiring instructions or payment details. That's really what leads to the kind of lowest common denominator of risk. And so we're all susceptible to kind of what's outside, I always call the fortress walls. And so, yeah, you have a moat. Yeah, you have your network, kind of protected. Yeah, you have data classification and things locked down. But when you have people backing into your loading dock of your facility and they're not up to mustard and you're not checking them consistently, and you're not also verifying their identity, the data, the items that they're bringing to the table in real time, that's the challenge. So the fraud vectors have continuously gotten more sophisticated, from business email compromise to spear phishing to other sorts of front of tech led sort of attacks and threats. And they tend to hinge upon identity issues. And these are common challenges that are not specific to the mortgage industry. The challenge the mortgage industry has is that we're on legacy tech, we're on very disparate systems and disparate processes. And the folks that settle the mortgage are completely outside the ecosystem. They're in the title and escrow world, where we have to find ways to engage with those parties, verify who they are, confirm they're good, make sure we have recourse, and make sure that even if it's not fraud from the context of cybersecurity issues, even if it's just intentional acts of fraud or risk or negligence or errors, those don't kind of seep through and become potential losses or impact the borrower in any shape or form.
It's I work with our regulator, and part of their license structure is on the escrow side as well. And I do hear about, instances where lenders are victims of wire fraud. So great product in the industry. Mm-hmm. I know recently FundingShield released a fraud report, and I'd love to hear what some of the key findings of that report were.
Yeah, so every quarter, what we've done is we've kind of taken the actual transaction level insights review, the details from the work we've done for clients, and boiled it down into kind of aggregated data and information that extrapolates to the level of us understanding where are the risks, where are the errors, where are the issues, for us to be able to more effectively find the trends that are probably outside the ecosystem of the lender, like we discussed in terms of where the risk is coming from, to back into what are the issues. So the way we do that is by looking at the loans. And the loans have told us about 48% of the time, there is some data element, risk issue, item that doesn't meet the lender's requirements to close the loan as it pertains to closing agents, closing agent risk, bank account information, data between lender systems and title systems that don't line up to the expectations of the lender or meet the requirements from a regulatory compliance perspective to close a transaction using that escrow company, title company, law firm, whatever the case may be, in all 50 states, right? So we're a national company. What those data kind of break down into are things like CPL related issues, closing protection letter related issues. And those are endorsements issued by title insurers for the benefit of a lender saying, hey, you are going to use my Old Republic Title or Stewart or First American Agent. There's 85,000 of these entities out in the country. You need to get comfortable in working with them. Well, here's an endorsement that says if certain conditions have been met, that we will back them in these sort of payout issues or recording issues and not being a first perfected lien situation because that entity did not do something right, missed something. We want to provide that level of assurance that we're backing that entity. So the way we look at that opportunity is we break down all those requirements. Have they been met? Have the regulatory compliance conditions been met? Is the data lining up from vesting to good standing to proper information? And about 45% of transactions, it was not meeting the requirements of our clients. So it's not a small number. We remediate those issues, fix them to get them to the closing table. And we go further by looking at source data comparison of information from title insurer systems to the lender's LOS to say, what does a title insurer have on this file, this title file order that corresponds to a loan closing and a loan file, not what the closing agent sent you by email or in the closing package, but what's in the system of the title insurer that's going to be bound. And so looking at multiple points of source data is how we come and provide our level of verification, because without source data, you're not really verifying anything other than what people are attesting to. So we need to find multiple layers of source data to kind of independently confirm and verify. And that's why we have warranties, as well as built into our products, levels of verification and automation that allow that data to be passed on into the capital markets, into funding, into warehouse banks, to make processes more efficient. So the data's, there's a lot of details here that we can go into licensing data, we go into wire related issues in terms of the wire accounts not belonging to the licensed party or named party in transactions. But I really encourage the viewers to look at our report because it goes a lot further than, kind of what the FBI may report very high level on business email compromise, where they talk about threat vectors, how it's been done, but it's not all reported and it's all captured by the FBI because if they don't raise a case or pursue it, it's not going to be capturing that data. What we're trying to bring to the table is kind of the other approach. What were the data elements that looked wrong? What are the things that didn't line up? What are we finding and seeing, and what's really a reflection of? For instance, insurance. I know it's a huge topic in the state of California. Every day we wake up and we hear about skyrocketing premiums. That also applies in the professional liability space. So more and more clients, about 2% of closing agents did not have sufficient insurance coverage to meet the baseline requirements of either their underwriting department or their investor that's taking out the loan. So those are things that are real. This is real data. It kind of tracks some other broader market trends, but a lot of it's very specific to the title, kind of title insurance industry, as well as kind of how title is procured and closed. Transactions are closed in the United States.
And thank you for that. And we have a link to the FundingShield fraud report included in this podcast episode. So feel free to take a look at that and reach out to Adam if you have any questions about that. Adam, I know lenders are always focused on efficiency, risk, cost reduction, and how is FundingShield delivering on those metrics to drive ROI for their clients?
Yeah, absolutely. So I think it kind of goes back to the last comment where we ended is by using source data, we're able to create actionable workflow driven sort of solutions, right? Where it's pass fail. So we can build ourselves into the milestones that allow a lender to say, hey, just like any other task that has to be completed for underwriting to be complete or for a closing or docs to be drawn or the funding threshold to be met, we can provide our data to be consumed in that workflow that the client no longer has to take all this data and information, interpret it, figure out, does it meet my requirements or my policy and procedure? We share our data models. We understand the requirements in the thresholds from a policy and procedure perspective, such that our client no longer has to do phone call verifications, licensing checks, insurance checks. They know that because we've verified, our contract lists it, our warranties back it, they're able to trust our data and be able to use that as part of the closing process. Typical client last year, about 280% ROI. We've seen clients go up to 400% ROI in terms of after they've spent money on our solutions, which we've structured like utility, a utility-like solution. They get that real-time live source data verified information that gives the ability for them to go back to compliance, to audit, to the CFO. We're seeing more CFOs coming into conversations with us, both within the CMBA and other parts of the country, because these are real risks that they're signing off on. And also their insurers and their bankers bonds require this.
It's a great return on investment. Thank you for sharing that. And I know that in every market, especially a market like this, people, companies are looking to be, efficient, cost reduction, certainly, reduce their risk of exposure for fraud or loss. Adam, FundingShield has been just a tremendous supporter of the California MBA, including, of course, your President's Council sponsorship in 2024. Thank you so much for that. Can you share with our listeners why FundingShield chooses to support the California MBA?
Well, I think that it kind of boils down to kind of a couple points. One, first and foremost, it's California. It's a huge market. It's a very important market. And specifically in the mortgage industry, there's very critical either players that operate here or whose management teams effectively run national platforms from here. And beyond that, there's a sense of innovation here and a way of wanting to go about doing things in a new or more efficient way. So I think that's the first part. Two, from an organizational perspective, the CMBA has provided a platform that really fosters the engagement of promoting the members to kind of contribute, bring their best people, make sure they bring them to the forefront, have them come, have them actually participate to make deals happen. So I think that kind of goes both ways, right? Creating that foundation and environment and being thoughtful about how to do that, how to showcase your members and the sponsors in the right way, and also how to make sure that in kind of motivates others to bring the right people. So I think the events that we go to every year are incredibly valuable, both from a content perspective, but more importantly, it's very important for us from a kind of doing business perspective. So I think that's the second part. And then third, I think the support comes back to the ability to be around people that are forward thinking, that are collaborative, and there's a very jovial, kind of positive, enthusiastic environment that CMBA brings. That, you know, even in tough markets, people still show up. And I think that says a lot about, you know, the organization and why it's the largest state-based mortgage bankers association. And of course, folks like yourself and your board that do tremendous work to make sure that that continues to be the case for CMBA and its membership.
Well, thank you, Adam. I appreciate it. I love working with you and Ike, and I hope we have many more years working together. Thanks for being on Connect today.
Absolutely. Thank you for having me.
And thanks to all of you for joining us. To access any of our past episodes, you can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcast, and Spotify. That's it for this week, and we'll see you next time on Connect.
Here we go.